Good morning. This is Sheldon here from the Currency Advisory Desk. Well, markets are desperately looking out for some sort of quantitative easing from Fed. We saw yesterday when Ben Bernanke testified, the reaction in the markets, the way the markets were moving, it was just witness to the fact that everybody is holding on to their horses to pump in some more money in case Fed also decides to go ahead with easing. We saw the Dow Jones, which fell down by around 70 points, and then it retraced and went up and closed up at around 70 points. So this is the expectation levels that are there in the market. Now moving to India, even though we saw the inflation data which came out a couple of days back, we saw that it was less compared to expectations. The data came at around 7.25%, and we still do not expect RBI to go ahead and cut rates. Well, the primary reason behind this is right now the entire sentiment has shifted towards the monsoon pattern in India. As we know that we as an economy are pretty much dependent on monsoon for our agricultural produce. So in case there is a less amount of monsoon, or the rainfall is not as much as expected, we will be having less amount of supply in the market. This in turn will cause the prices to increase. So before the next policy meeting, which is there on 31st of this month, 31st of July, we expect RBI also to keenly watch the monsoon patterns in order to decide whether they should go ahead with a rate cut or no. Now the dollar index is presently at 83.12 levels. It's holding on to the support of 83. It's not going below that. And we expect the dollar to trade in a range bound fashion, basically from around 54.50 levels to around 55.30. That's for intraday, at least for today, because there's nothing much that's going to help the movement of the dollar or the rupee either way. So it will be pretty flat to sideways movement that we are witnessing today. Moving to the UK, well, the UK CPI, the Consumer Price Index number, came in at lower of around 2.1%. Now, this is a good thing for UK. This is a good thing for the economy, because if the inflation is reducing, it gives them more room to go ahead and decrease rates or to pump in some more funds. And this is what has happened. We saw that the Bank of England went ahead and pumped in funds into the UK economy. They went ahead and they did more bond buying in the market, and this, you could say, was supported by the lower inflation that came out. The thing to notice here, or the thing to note here, is both the core inflation as well as the retail inflation were lower. So this is a huge plus point for the UK economy. Now we expect the pound to strengthen on the back of this and move to around 1.57 levels in the international market. In Indian terms also, we expect the pound to move to around 86.50 to 87 levels in the immediate term. Now, there's not much happening in the Eurozone as of now. The major decision that we saw was that the ESM participation by Germany has been put on hold by the German court. So, and that is going to be on hold till September. So until and unless we don't get an actual positive confirmation from Germany, which is the powerhouse of the Eurozone, there's nothing much that's going to happen with the Euro, unless and until some nation goes ahead and reduces the interest rates or some sort of easing happens. Also, there's a note to be observed that the fiscal cliff in US is something that's going to come out really strong in case they do not tackle this measure. So that will also play havoc in the market. We see the euro taking support at around 1.22 levels immediately, and if it breaks this, the next level will be around 1.20 to 1.2050. Now, if the 1.20 support is broken, this is a very crucial support. We see the euro going down to around 1.15 levels. There's nothing that's going to stop this particular fall. In Indian terms, this translates to something around 66 to 68.2 levels. We'll see the euro rupee trading in this particular band. Now, the Bank of Japan released its minutes of monetary policy today. Now, they are already stating that they are ready to help the Japanese economy by increasing any further sort of government bond buying program and more funds. This helps the yen a lot. Whenever the Japanese government or the Bank of Japan comes up with such statements, we see that the yen definitely rallies. But yesterday what happened was that the Fed meeting, or the Fed Bernanke statements were so crucial that we saw the yen fall, and again it retraced back. It fell below 79 levels, and it retraced back to around 79.1015 levels. We expect the yen to strengthen further, and we see it moving back to around 79.50 to 80 levels in the immediate term. In Indian rupees also, we see the yen to go above 70. We see the nearest you could say resistance for it is at around 70.50 to 71 levels. So if it breaks 70.50, it will cross 71, that is for sure. Now, looking at what's happening, China has increased its buying in US treasuries. This is a point which strikes any analyst, because if they are increasing their buying in US treasuries, this shows that they have still more belief in the US treasury system. They have increased it to around $1.16 trillion is what China holds of US treasuries as such. And as far as the forex reserves are concerned, we know that China has the highest amount of reserves, which is around $3.24 trillion. So 1.16 trillion of the treasuries and 3.24 trillion of forex reserves is what China holds in its kitty as of now. This shows further investment appetite from China into US treasuries, which actually in turn helps the US economy. It helps it because the major lender to US is China. Now if there is this cyclical this flow of funds from China to US, and in turn US supplies its goods or purchases goods from China, this you could say is a sort of boost to the economic system. And this happens, we can definitely see the dollar rising up, and probably against the rupee also we see that there will be a bullish trend against the rupee in dollar terms, that is. So well, that's it for today.